4 minutes to go before the closing bell rings on this Monday. The markets are mostly red. Dow Jones Industrial's up 162, but we've been kind of in a tight trading range for most of the session here for the S&P, down 19, NASDAQ losing 184, Russell down 22, the transport's down 149. I want to point out credit card stocks, particularly Visa. We can throw MasterCard and Amex in there as well, but Visa is hitting a record high on pace for its all-time record close here of $382.34. It's gaining $11. MasterCard is up 3.25%. Amex is up 0.5%. Part of what is the issue here is that interest rates have been moving higher, at least for Treasury yields. And that, of course, does affect, in some ways, has a positive effect when it comes to all of these credit card names here. 10-year Treasury yield right now is actually down 2 basis points to 4.7, but still the 30 years above 5.2%. And that, of course, is close to a 19-year high. We've got it at 5.232. For the past hour, we talked about everything: Iran retaliation, Canadian tariffs, the AI trade, Bitcoin. But would it surprise you that there's a quiet quarter of the market beating just about everything else? Morningstar points out that it is the smallest stocks on the board, the micro caps. As Morningstar put it this morning, the mice have roared in the past year. For the 12-month period ending August 17th, Morningstar's microcap index returned 45.7%. Meanwhile, the broader market returned 22.8%. Today's countdown closer: seize opportunity in small caps. Joining me now via phone is Glenmede Investment Strategy and Research Chief Jason Pride. He manages about $53 billion. There is a difference, Jason, between small cap and micro cap. Let's tackle the micro cap issue first, though. Does it surprise you that they have outperformed just about everything else?
Two things. Number one, smaller cap companies, just generally speaking, things down the spectrum away from the largest behemoths out there, have until this year provided fairly kind of subdued performance. To see a broadening out here of the marketplace makes a lot of sense. Now, when that broadening out occurs in an environment like this that is pretty liquid with funds and ability for investors to kind of broadly purchase a lot of different things, microcaps rallying in that environment makes some sense given the magnitude of available stocks there are relative to the amount of funds that are just available to actually go and invest in them. So this is kind of two things that's going on at the same time. One is a broadening of the marketplace, which we think is very healthy. And then secondarily, a rally in maybe even small cap into micro cap names. There's probably more liquidity driven than anything.
So let's talk about the small cap area that you really feel is an area to move money into at this point. Specifically where?
Our focus is primarily on fairly established businesses within small cap securities. That can actually be, from our perspective, can be down capitalization even within large and mid cap, but also into the smaller cap territory.
Okay.
We may be a little bit more hesitant to reach out and play those microcap names because they tend to be by far the most volatile and risky of the basket. But down spectrum is a very healthy thing to have for this economy. And
Jason Pride, our thanks to you. Well, just the Dow in the green today. We'll see you tomorrow.